Ira Epstein, and here we are for your weekend edition in front of Martin Luther King Day. So a lot of markets are closed tomorrow or will close early. Futures markets, a lot of them are open tonight. But remember, early closes will be the norm tomorrow. So keep your eye on all that. And Inauguration Day. So you have two events taking place in a very large way. And tonight is Sunday, the 19th of January, 2025. So I felt, hey, let's get this out. Let's take a look at it. You're going to have lighter volume tonight, as you can imagine. But the stock indices did start off the day to the downside. You are looking at gold down, the silver market slightly, copper market down, and platinum down. So the metal market's coming down. The dollar index, you can't blame it on that. The dollar index is actually lower as we're getting a little bit of a rally in a number of the foreign currencies. And if you take a look at the bonds, the notes, they are all adding a little bit of yield. And in the energy markets, stable is the right word, but it's interesting to see natural gas down with this cold weather. Now, I don't know where you live if you watch this, but if you're in the United States, in the heartland of the country, like I live in Chicago, we are maybe 7 degrees as I'm talking to you, and it's right now about 6:10 in the evening. We will go down to a high of 3 for this week, Monday or Tuesday or Wednesday, they're saying. And who knows where the lows will be. But then we come out of it and we'll be in the 30s. If you're watching football tonight, you can see the games and you can see out east what they're going through with a lot of the snow. But this cold weather's headed their way. So that's why the inauguration has been called indoors. And a lot of people that bought tickets, well, they either go to the Capital One Arena or they just don't go. So a big event had them be moved indoors. But that's what you're getting right now. When we look at the S&P on a monthly area chart of closes, you're looking still very good. What have you given up? You're nothing from the highs at this point. The highest close we've had on a weekly chart has been 60.99. We're roughly, 70 points away from that in round figures? About that. Now, the key would be if you get and close under the 18-week average of closes of 59.36, that could be problematic. That could be where the market begins a correction in the marketplace. And right now, I mention that because you haven't been able to get through all of this in months. So we've been stuck up here, not going anywhere. Doesn't mean you can't. Remember, there's a euphoria that we're going to be looking at, but why is the market down a little right now? I think people want to see what happens and what the bills, the presidential orders, they aren't bills, they're presidential orders that are going to be signed starting tomorrow or Tuesday, depending on when the president puts his pen to them. What do they say? How severe are they? What happens with the deportations? I live in one of the central cities for this, Chicago, so this is a target city where they're going to go after people. Went out this morning with a breakfast for buddies, and we sit there and we shoot the you-know-what for a while. And one of the guys, very large businessman in Chicago, and we were talking, and I said, can you imagine what company has the brains to hire these undocumented people? And he said, no, I can't. That's why when they say we're going after these bigger companies, he goes, I can't imagine anybody that would do that. He said, our job isn't to know if the paper work is real. It looks real. We're not supposed to be beyond that. But he said, at our companies, we have to have paperwork for every Hispanic we hire to prove that we were given this. And he says, we do. And that's what you do. He says, I can't imagine, but we'll find out. That's what's going to be. Certainly the restaurant industry is the target area, I would assume, because you see so much of that. It's an entry-level job for a lot of people that they can build upon. We're going to see how this goes. San Diego's got the same problem. So that'll come up there. So I'm just giving you ideas that none of us know what's going to happen. By the way, before I go any further, let's applaud. 3 hostages were released today by Hamas. Now the Palestinian part of that Israel's holding has to be given. And next Saturday, they've already announced another group of hostages will be released. And then Israel's to do what they're supposed to do. So as you can see where we're at, fighting a battle, the pattern is lower highs, lower lows. So the trend on a swing line is down, but the market's over the 18-week average of closes, and it has been staying over that. You had another test of it, as you know, 3 weeks ago. You did close under it. You snapped right back. So the question is, can you get under that 58.09 to prove there's some downside that's possible in the market? I don't know that it can do that. I know when the bias is up, that's my bias. I have a bullish bias until that disappears. But when the two fight each other, the swing line down, the bias up, you walk away. And that's probably the smartest thing you can do until you know where you're at. And the S&P 500 index in the slow stochastic, the momentum here is overbought. So you either are going to embed or you're coming down. And when you lost the bullish reading, you immediately went to the target of the 18-week average of closes. In the Dow, you got oversold. You corrected by coming all the way back. So this is a very interesting play that's at work here. Now, I say interesting because you had an outside week down on the week of the 10th. If you take out the high of an outside week down, which you did, until you take out this low, you're targeting the upper Bollinger Band. We're going to see which one wants to work. These are whipsaws back and forth. And certainly, as a chartist, if I didn't know the name of any of this so you don't get swayed by that, it is certainly what's it going to do here. Until that comes out, I have the upside bias in the market. In the Nasdaq, went down to the 18-week average of closes, held it, has been working off, present tense, not past, working off being overbought. It's still overbought with the 71 reading. I view anything over 70 as overbought. And in the Russell, you keep coming up right here to the upper 18-week average of closes and just can't seem to get over it. This has been the weakest of everything there. And I just don't have a game plan for you on it other than as long as it stays under that, my bias is bearish. We then come to the 5-year notes, and on a weekly basis, you're still embedded, haven't lost it. Get a gain this week, you probably lose this 19.61 reading, and if you close over 21 on the reading, then I'm going to target getting back up here to that 18-week average. Same thing in the 10-year note. Then we get to the dollar index, which still has the bullish embedded reading. So even though it's down nearly 10 points tonight, it's still holding the bullish part of that. Euro is still bearish, embedded. So while you're getting a little bit of a rally, it probably is saying, hey, come on and sell me, because I don't think anything's going to stop the European Central Bank from raising interest rates right now. So as their meeting comes up this month, January, I look for that to happen. Canadian dollar locked into a bear trend, still down. So don't get caught with an overnight play on a holiday just because you're getting a bounce. Even the yen has got a problem here. Now, in the yen, you are flirting with losing the bearish embedded reading. They're talking from Bank of Japan. Will they raise interest rates at the meeting this month, January? If they do, maybe you can get back to the 18-week average, but I don't think I'd get too excited until you closed over that with authority. In Bitcoin, market is just holding on to the big gains that it made. And this market took off this week. You finished up on the week, if you look at it, $10,000. So if you recall, we were looking for that break of 15, 20%. Absolutely got it. Now the market made it up as you take a look at Trump taking office, down 3,600 tonight. Not my cup of tea. I don't know how you can handle those swings. Then you get to Brent and WTI, and they've been staying very comfortably under the 18-week average of closes. You're up to the 100-week average in the Bollinger Band. That is generally an area the market has great trouble with, and I would say the pros are taking money off the table there. I feel the same thing between the 200 and the 100-day average in WTI, and I do realize you're going to upset things if Trump has presidential orders to attack immediately the oil that Iran has flowing. And if he puts presidential sanctions that and enforces them that Biden did not, well, that could cause energy prices to go up a little bit from here until we see who's going to make up the slack in that. Rebob gasoline back to the upper Bollinger Band should be a resistance zone. So you put it all together, you try to come up with trade ideas for yourself, and that's where I want to come in for you. Simply put, if you trade futures, stocks, ETFs, I come out each and every morning, Monday through Friday, holidays exempt, and I put out updates to give you ideas on the markets. And we track them. We track what we put out as a recommendation until the trade is over. And after that, that's the end of that. But 40 futures charts, 40 plus stock and spider. If you're a subscriber and you write me and you have a question, I even create a personal video for you on the question that you have and answer that. So the whole idea here is, can I throw an idea out that maybe you have questions on, a stock, a futures that you want to get into, and I give you the information to play off of that. You go to iraepstein.com research. It explains how everything works. There's an icon up here if you're on a PC. Give that a click. I'm Ira. I'll catch up with you no later than Tuesday. Remember, tomorrow's going to be one of those days where I don't put out at the end of the day any of the reviews on the market. I might do it in futures. There's no need to do it in the spider ETFs. I'm Ira. You take care.